Ready or not, the new capital gains tax hike is in effect in Canada. It commenced June 24th, 2024. Luckily though, for Canadians, you are still able to sell your primary residence tax-free. That is still on the table. However, this new capital gains tax hike will change the taxation landscape in Canada. It's affecting many people. If you're a property investor, a doctor, a professional who operates under a corporation, or even an entrepreneur, this is affecting you. I sat down with Mo. He's a tax specialist from TaxHeroes.ca. Shoutouts to Mo and his team. He breaks down the capital gains tax hike from A to Z and helps you strategize accordingly. I hope you enjoyed this chat. Unfortunately, I lost the video footage of it, so there's only audio recorded. However, it is super informative if you listen to the end. Cheers.
Joining the Brick by Brick podcast. Mo is from Tax Heroes, and they're very active on Twitter, very opinionated. We're hoping to get some of that energy and insight on the call. Thanks for joining, Mo.
Thanks for having me, guys.
No problem. Anytime. The man, the myth, the legend. If anyone wants to follow him on Twitter, the Canadian tax guy, highly suggested. Every time I look at this guy's Twitter, I learn something new in the tax code. So definitely, if you're into that, give him a follow. Shout outs to him.
I appreciate that. That's what we're trying to do, just educate people about taxes. So that means a lot.
So let's get right into this because there's a capital gains tax hike that is apparently happening. Crazy how they just released a draft for something that's happening this month. So tell us about that. I want you to break that down and give our listeners some insight to that.
For sure. So I think one thing I do is I try to keep things simple. I don't want to go into the mechanics, but what's happening is that there's different types of incomes you can earn. There's business income, dividends, capital gains. That's another type of income. And the one that we're kind of is in question with the draft legislation. And what's happening is that prior to June 25th, in Ontario, at the highest kind of tax rate, an individual will pay about 27% tax on a capital gain. So for every dollar, they're losing 27 cents to tax. They're keeping about 73%. On June 25th and after June 25th, what's happening is that they're actually going to still pay that 27% tax on the first $250,000 of capital gain. But any dollar above that $250,000 that they have in a year, they're going to start paying 36%. And that's for an individual. So people with very large capital gains are affected if they're expecting more than 250,000 of capital gains in a year. There's also the corporate side of it. So corporations also pay tax. Many people who have businesses, they might set up a corporation to carry out their business for various reasons, tax reasons, liability reasons. Corporations currently, before June 25th, they're paying about 25% tax initially on a capital gain. On June 25th and after June 25th, they're going to be paying about 33% initially. And that is not, there's no threshold, there's no 250,000 threshold. That's on their first dollar. So that's kind of what's happening with this capital gains change. And
that's crazy.
yeah.
So from your experience, who is this affecting the most? Like, we understand it's affecting capital gains, but who are the people that are being affected the most in this hike?
There's three main groups that are being affected. So number one, anyone who has a corporation, right? Anyone who has a corporation and they're earning investments in their corporation, whether it's a rental property, whether they own securities, because any capital gains they have, it's going to be taxed at a higher rate. So they're getting affected, on their first capital gain. Right. The second group of people who are kind of being affected are people who, would generally expect to have more than $250,000 of capital gains individually in a year. So that could be people either that are, wealthy enough where they're, regularly having over $250,000 of capital gain, or, generally people with rental properties. Rental properties, you don't kind of spread the gain over multiple years. When you sell, you kind of have that gain in that one specific year, and then in the other years you might not have anything. But because that threshold is based on 1 year and $250,000 in 1 year, a lot of real estate investors are going to be affected. There is a third group, and this is not it's kind of missed, but a lot of people with stock options are also affected. So a lot of tech employees and their employers who want to entice them to join startups and stuff because a lot of the competition is based on stock options. They're also affected, but it's kind of been missed and hasn't been getting a lot of mainstream. But they're also affected relatively big because again, they may, when they exercise their options or sell their shares, they might have, capital gains or other income that are kind of tax similar to capital gains, and it might be over 250,000 a year.
Interesting. Let's zoom in on the real estate investors. How can these guys plan for the future with this capital gains hike?
So there's a couple things, right? So number one, um, it becomes a lot less attractive to own real estate in a corporation if you don't already have a corporation when you're doing business, right? Because you're going to be paying more tax on that gain. On There's no 250,000 threshold for the corporation. So if it's just two people and they want to set up a corporation to do real estate, that's a lot less attractive than two people just setting up a partnership and doing it. When you have two people buying a rental property, each person can use their 250 on a gain. Whereas if they, form a corporation to buy rental property, uh, there's no threshold. There's no 250 threshold at all. Mind you, there's two people. They're getting that higher tax rate on the first initial dollar. So there's a lot of thought that goes on how you structure real estate investments. Also, you might want to be strategic about uh, when you sell or how you structure sales. So there's ways to kind of, if you can get the proceeds over a number of years, it's not very common. People don't usually get the proceeds over a number of years, but you can spread out the capital gain across several years. If you are selling real estate and you do have a very large gain, so that you can use a threshold over multiple years. And then lastly, there is planning you could do right now before June 25th to kind of trigger a gain without selling it to a third party or anything. You kind of still own it, and it brings, you pay tax up. You could pay tax up to the current market value, and then any future appreciation will be subject to the kind of the new tax rates.
So I mean, a lot to unpack there. I think one of the things that caught my attention, you mentioned that you can spread out the gain. Yeah. How do you just so I understand? Does that mean that you sell within the corp, but then you don't pay yourself? Like, how does that work?
So let's say someone has a $500,000 gain. They're the sole owner, right? If they sell in a year, only 250,000 will be at the lower capital gain tax rate, and then the remaining 250,000 will be at the higher. But let's say they can get the proceeds over 2 years. So the sale is structured such that they get half the money from the sale in 1 year, and then the other half of the money in another year. There's a reserve you can claim such that you recognize 50% of the capital gain in 1 year, and then the other 50 in the other year that you get the money, right? So you're using your $250,000 in 1 year, and then the next year when you get the remaining 50%, you're using your other $250,000 to get the capital gain threshold when you get the remaining portion of the proceeds.
So, sorry, Cam, why don't you go ahead?
Yeah, I was going to ask. So, in regards to that, when you sell and you get, how do you defer the profits when you sell property?
So this might be common, for people who might be selling to a related party. And typically in a third party real estate deal, you're not really seeing delayed proceeds for
Right.
for sale parties. So this is usually like when it's kind of between a related family member, someone trying to sell something to their family member or gift something to their family member. You can claim it's called a capital gain reserve, where you, in proportion to kind of the proceeds you get, you can recognize that portion of your capital gain. So if you get 50% of the proceeds in 1 year, you put 50% of the capital gain in your income, and if you get in the second year, if you get the remaining 50%, you put the remaining 50% of the capital gain in your income.
That makes sense. Okay.
So somewhat of a rare solution to a small subsect. It's a good scenario when obviously someone is eligible for it. For like the common person, is there any strategy that that they can employ, whether it be on how they structure who's on title, or maybe estate planning for just sort of transferring it upon death versus selling, refinancing to take out equity as opposed to eventually selling. Like, what are your tips and tricks for people who, let's say, for example, aren't buying or selling from someone at arm's length?
Yep. So I think number one, it's how you structure. So I think the biggest thing from this, it's hard for people who kind of are already in the situation. Number one is how you kind of structure the deal and making sure uh, being aware of the risks of having more owners, right, and sharing more of the pie, and also being aware that of who's contributing to purchase the property. But the more kind of hands you get in, the more $250,000 thresholds that you have available, right? So with more owners, you get to kind of spread that gain over multiple people, use more of the 250,000 threshold. That's one thing. Second thing is people who wanted to kind of take advantage before June 25th. They can kind of trigger their gains now, especially, and it generally only makes sense if, depending on the amount of gain you have um, and how soon you want to sell the property. If you're going for like a long-term hold, doesn't really make sense to kind of trigger and pay the tax now. Um, it might make sense to just hold it and pay the tax when it is. Third, some people might just want to hold on to their properties, right? Now with the higher tax rate, it kind of they don't want to kind of pay that tax. There's more of an incentive to defer the sale, so some
Right.
people might just hold on. And then one thing you mentioned right now is on death. So generally when you pass away, you're deemed to sell everything you own, and so all those rental properties you're holding over several years, you're gonna have a huge kind of gain uh, on death, right? And you only have that 250,000 threshold on death. So if you have, like $1 million of capital gains on death, 250 will be at that lower threshold, uh, and then the remaining 750 will be at the higher tax rate. So in that cases, like if you're anticipating a death, and you're not planning to pass it to family members or anything, you might want to sell, shortly before death, so that you can use your $250,000 for each year.
Yeah. Well, let's say, for example, there's a person who's not, well, I mean, everyone's going to anticipate death at some point. But let's say, for example, you had a sibling, parent, child, whatever the case is, and you wanted to create like a seamless transfer. Adding the person on title with a survivorship benefit, like if someone signs, for example, as joint tenants, could that avoid like the transfer creating any additional tax? Like it would just go to the person that's still alive?
Generally, it wouldn't, because there's this concept of the legal owner and the beneficial owner. The person who's taxed is the beneficial owner. So just because you're adding them on title, it's not like you're actually selling anything to them.
Right.
So you're still going to be taxed on the full capital gain, um, and, and and there might be other issues like legal issues with adding them on title, but generally you're still going to be subject to the capital gain. So unfortunately, that kind of strategy doesn't work. But if you do want to prematurely sell, a portion of your property, if you expect it to appreciate like crazy, so that you have, two people in play, um, when you eventually sell it, then that is a strategy you could do. But be mindful that when you sell it to them, you're gonna have to pay. You potentially might have to pay capital gains on that sale of however much of the percentage that you want to give them to that person.
Got it. What about non-resident owners? People who do not have their PRs here that have real estate and they want to sell their real estate, or they dispose of the real estate after June 25th. What happens in their scenario? Is anything different?
So non-residents, yeah, they were typically paying, about a 25% tax or so.
Yeah,
That is also increasing for them to about 33%. So they will also be subject to. Sorry, give me 1 second.
yeah, no worries.
Sorry, I'm just in a shared office. I'm just going to relocate. Give me 1 second.
That's okay.
Yeah, no worries. There's always some sort of uh, attack against the non-residents. I mean, it's just a growing thing. Like from 25 to 33%. It's like next year, like an extra 2%. Whatever. We're already like taxing them to try and get them to avoid investing over here. And one of the things that's like interesting about the overall vision behind this is like the recent changes is that it's really discouraging investment as a whole.
I know.
Whether it's foreign investment, whether it's entrepreneurs, whether it's like people who have reached a certain level of society.
Yeah.
It's just overall depressing, I would say, at the most. The only good thing that came out of this, I think, was the highlight of the modular homes and the prefab homes. They're like, they definitely got the win there. But aside from that, I don't know. I don't know who this is helping except for the Liberals.
They say that this is only.
Sorry, can you guys hear me?
Yeah, I can hear you.
Yeah.
They say this is only affecting 1% of Canadians, but it seems like this is going to affect more than 1% of Canadians. But I just wanted to go back on to the non-resident people who plan to dispose of property after June 25th. So you're saying so is there withholding tax? Because I know they have a withholding tax. Is that being increased, or is just the capital gains tax in general being increased?
So when it's kind of funny, there's a kind of a pretty crazy process when a non-resident sells a property.
Yeah.
Generally, the buyer has to withhold 25% of the money. So let's say you're selling a property for $1 million and you're a non-resident. The buyer is actually only supposed to give you 75%.
Yep.
Yeah.
And take 25% and give that to the CRA.
Right.
Now there's a certificate. So, sorry, what were you saying?
I said that's crazy.
I know it is. Imagine if they have to settle a mortgage or anything, it really causes a huge headache. Now, CRA, they recognize this, so they say, you know what, the non-resident can prepay its tax by filing a certificate, so that the buyer doesn't have to withhold 25% of the full amount. You can prepay your tax. But then you can file, and then you'd have to file your tax return after. But since you withheld, there's usually no tax that you owe.
Right.
What they're actually saying is the capital gains change. It affects the non-resident buyers also, but they are not going to change the withholding until 2025. So the buyer will only still have to pay withhold 25%. But if the seller, the non-resident seller, ends up filing his tax return, they might actually have to pay that difference of 8% or whatever the case is. So it's just a little funky situation that is going to affect a small number of people in 2024 that are like non-residents that are going to sell their property, and it's just a little. I don't know why they didn't just apply it as of.
I think one of the interesting things that has occurred in the tax system recently is a lot of less known, very poorly communicated tax changes. Like one of them was, I think it was repealed, the inclusion of bare trust declarations.
Yeah.
Where people heard about it and then what's it called? They didn't know that it was actually repealed. So it's like, well, is this sort of like a guinea pig scenario where they'll throw out whatever, find out what doesn't fit, and then after go and retrace, or
that caused a crazy amount of issues. I can't even tell you. That was one of the craziest things I've ever seen. Like the amount of people who had to file who had no business even paying attention to this stuff and letting people know.
If they just co-signed, they were told, oh, you didn't fill this out or whatever the case is, and
exactly.
Sometimes people, if they're doing their own taxes, if they're employed, it's not complicated, and they feel comfortable in doing that. Usually they use tax software that will provide tips and stuff like that. I don't know how often that tax software is going to actually provide those tips. You probably have some pretty good insight into that. Do they always lead you in the right direction, or
they make like there definitely are mistakes. I promote it a lot, especially if if you're lower income. Accountants are expensive. Like we're not cheap. We are professionals and stuff. So I do promote it, but obviously they're not going to be as as informative, catching everything, and letting you know everything. And kind of the hard part is entering the information, right? You don't know. They might tell you something, but you don't know what that entails, right? So
Yeah.
it comes a challenge, and like, yeah, I don't think they made anyone aware about Bear Trust. They know software really is doing that. Only there's no like, uh, software that's available to the general public that they can use to prepare it. Only accountants, or if you want to figure out how to do the forms yourself. So that was a big issue. And the funny thing is, it was only, they were only exempted it for 2023. They haven't for 2023 filing. So for next year, you may still have to file this unless they've announced anything different. So it's
Oh,
still
so it's
not.
still for 2023.
Yeah, so we don't know actually. Like, I think there's a general expectation that they're going to exempt it forever, but they haven't made an announcement. And since they haven't
Of
made an
course.
announcement, technically you
Classic.
still have to
Leave it
do
to the
it.
last minute, then
Yeah. They'll make an announcement February of 2025. Don't worry.
We're
That's
gonna
all.
go through the same struggle that we went through this year, and then they're gonna announce it on the last minute. So
On the
we'll see.
last minute.
So one of the things Cam and I often talk about is the potential for change in the government, for better or for worse, because obviously there's a lot that remains to be unseen, very uncertain times. Um, do you foresee this type of proposed legislation? Has it gone through? Do you know if it's already been voted on or?
There's an initial vote, but that's just the start of the legislative process. There's a whole bunch of things. There's additional things that need to happen. So again, still a potential it doesn't pass, but
So
the initial vote.
let's say it does pass. Like, do you foresee something like this or like similar legislation ever getting repealed with a change of government, or is it one of those things that there's nothing more permanent than a temporary government measure, where once it's in place, that's it. It's in there.
So someone informed me that it is very common to see people not not retract tax increases. So they like that increased revenue. They like the government getting more money. So it's very hard to overturn it. Now I think the conservatives did say, so initially they said, they didn't make any statement on it, but recently they said they're gonna review uh, the capital gains tax change if they're elected. But they didn't give any more detail, and previously they didn't make any announcements on it. So it's not, they haven't said for sure we're gonna strike it down. They haven't said anything. They just said we're gonna review, and we know governments typically, in the past, they've not always been so eager to reverse tax increases. So I think
Yeah, yeah.
I guess I'm a little skeptical about this actually going away.
Yeah. Just curious. I was watching a video. It was on CBC, and the the guy was saying to Christine, was it Christine Freeland? He was saying there's three major groups that this capital gains hike is affecting. It's farmers, doctors, and home builders. Just out of curiosity, how is this affecting home builders? I'm not sure if I heard that right either.
I don't think that was, so I think he just kind of, like, I don't understand why he said home builders, because home
Yeah,
builders typically their income would be business income. It wouldn't be
right,
capital gains. Uh, Maybe what he meant in that sense is that, people who want to buy rental properties will be less incentivized. So
got it.
they might not have as much demand to sell their properties. But in
Right,
terms of actual tax for home builders, usually their income is treated as business income, and we work with a bunch of home builders as well, and they typically don't have capital gains unless what happens is they have some sort of other investments, and like other rental properties uh, that they're eventually going to sell and stuff, and in that case the home builders uh, building it so that it's like purpose rental, it's a rental purpose build, and then
yes.
they eventually sell that, then yes, then it affects them.
I guess they were talking about like the sale of their actual product. Like basically,
Exactly.
their sales will plummet because investment is looking less attractive.
Exactly, the demand for their homes will go down.
Got it.
So Mo, what pissed you off the most about this upcoming legislation that's being voted on? Like, of all the things, like, we've focused on obviously capital gains, but there's other stuff. What pissed you off the most?
I think, people have their own opinions of tax, higher tax, lower tax. What I care about is like just things being executed properly, right? Like the fact that they've said, hey, this legislation is going to apply as of June 25th, but it may not pass until the summer. And on top of that, we don't get the details till 2 weeks before. The execution was absolutely terrible. And like we had to kind of guess and like use different kind of tax maneuvers in case people wanted to kind of trigger their gains before June 25th so they get the lower rate. There's different kind of maneuvers, and we have to kind of take advantage of these maneuvers just in case the legislation didn't come out on time. Now the legislation came out, and then we have to kind of revisit all that stuff because now we have a better idea, but there's still this kind of uncertainty of it passing. So it's just, I think the execution was just done terribly. Like if they just did it by the end of the year, it would have been just a lot smoother, and there would have been a lot more time to kind of digest and plan for it. But because of how it was, it's caused a lot of issues for people and for us.
The implementation, I think, we were talking about this before, that everything is left to the last minute where it's like, okay, we know when the due date is, but we don't know if it's actually going to be in effect until 2 days before.
And we don't know details, so like
exactly.
Nobody cares about those things. So
yeah. No, it's ridiculous. Well, you know what, Cam, one of the interesting things that you had mentioned the other day is that there's a lack of building starts that's occurring, and we're not going to see the effects of that for a while. So it's kind of a lagging indicator. Do you think that these sorts of capital gains and tax changes and the overall sort of discouraging of investment is going to, further exasperate what's going to happen in a couple of years? Or like, what are your thoughts on that?
I do. I'm already having clients ask me if this capital gains hike is affecting anything in the marketplace. As soon as I hear clients asking that, it leads me to believe other people are also thinking that. So it will affect things. Investment might look less attractive than it is now. We'll see what happens in the future. It's hard to say. One thing I wanted to ask Mo, though, is what can people do now to either avoid or strategize for this tax that's coming up, or the tax hike that's coming up later this month?
So there's planning you can do, again, if you don't want to sell to a third party, but you're still planning to sell in the next however many years, depending on the amount of your gain. There are things you can do to kind of trigger that gain up to fair market value, even less than fair market value, while you kind of still own it. And it's kind of, a lot of people have been taking advantage of this. It doesn't make sense for everyone, especially if you're a long-term holder, 10 plus years. It probably doesn't make sense,
Right.
or you don't have much of a capital gain. But for people who do have kind of substantial capital gain, and they're planning to sell in anywhere between the next later this year to like the next 6 or 7 years or so, there is this opportunity to kind of pay the capital gain tax now at the lower rate before the higher rate, while you kind of still own it. There's a couple of issues with this planning, though. Is number one is you have to pay the tax now. So maybe you might have to refinance or something to be able to kind of pay that tax. And number two, if it's an individual doing this, there's something called AMT, or alternative minimum tax, which basically says, if you're not paying enough tax, you have to pay this additional tax. And then when you pay enough tax in the following years, in the following 7 years, you can kind of get this temporary tax back. And so AMT might also apply if it's an individual doing this.
Wow. Sounds confusing.
Nothing is simple.
Investors are discouraging everyone, it seems.
It is, yeah. No, it's almost, they've trapped you in the sense that, okay, let me try to sell everything before, but if you do that, then you have to be worried about AMT, and then so it's been such a mess all around. Nothing is simple. This is not simple stuff. This is not, a lot of people I come across a lot of people who are like, I'm DIY tax planning, and I'm like, you will not be, there's very few accountants that are able to talk to you about the nuances of AMT, which is a mess on its own.
Right.
You will not be able to figure this out. You won't even know, you won't be aware of it. So just nothing is easy, and seek professional advice. And I'm not just saying that because I'm in the business. It's because I don't want people to get screwed over with what they do.
That's fair.
Yeah. Well, the other thing too that I think is that was mentioned in the proposed legislation was that first-time homebuyers would be able to amortize over 30 years for new builds specifically. So behind the scenes, there must have been a pretty big home builder lobby into this overall legislation, and I don't know if that's part and parcel because. Like Cameron was saying before, that there's a lack of housing starts, and maybe their overall forecasting or business model is not what it used to be. But one of the funny things that came in the media in this last couple of weeks was Justin Trudeau mentioned, we need to have more affordable housing. We just can't have people's principal residences decrease in value. I mean, do
Talking
you
out.
think it's possible that, I mean, not possible, but do you think it's likely at some point in the next 10, 15 years, based on all of the trends and increased complexity with taxes, that we will see in Canada principal residences being taxed?
You know what? I think it's very hard to predict tax changes. And, people have been talking about capital gains increases for the past 10 years. They say it's going to happen this year. It's going to happen this year. And no one expected it. Everyone, after guessing for the past 10 years, not many people expected it this year. And then it happened. So I'll say it's hard for me to predict. But if I had to say something, I don't. There's a couple things. There's people, they don't want to screw up their current voter base, and screwing up, people who their whole retirement's based on their own home, and their home value. If they get rid of principal residence exemption, or they decrease the value, they would kind of upset a lot of people, because now the home they've lived in forever is appreciated over time, um, might be subject to tax when they sell it, and that was their whole retirement plan. They plan to leave that for their children, so it would upset a lot of people, and I don't think anyone's in the kind of business of losing votes. But again, it might appease younger people, because they're like, yeah, let's screw those boomers over, and all that kind of stuff. And
Well, along the same lines as that, like as you probably have also seen on the news media, that immigration is such a hot topic, and the new class of immigrants that are coming in from wherever, they're also kind of part and parcel with the let's say Gen Zs or people trying to break into the housing market, and they often look for, not anyone in specific, but the media often looks for scapegoats. So as we've seen, foreign investors have been devils for so long, and I'm wondering if like home ownership kind of becomes the haves and the have-nots, where like we're slowly seeing the transition where people are turning on their neighbor that owns a property. It remains to be seen. Hope that it doesn't turn out like that, but I'm starting to see the echoes of
Yeah.
that sentiment.
I definitely see that too, yeah. And
Yeah.
I think they need to be cautious, because if you do something like that, then you're gonna have people less likely to sell their home, right?
Right.
Yeah,
And
that's
so
true too. That's true
it
too.
would actually might reduce supply, right? Let people less
Absolutely.
likely to move out, downgrade, things like that. So
Well, Ken, what are you seeing for like buyer seller sentiment, like in this market with all these things happening?
That's a good question. Ever since the rate hike June 6th, to be quite frank, um, I think there's more pent up sellers than pent up buyers right now.
Oh, okay.
Since June 6th, we've been noticing, yes, showings are showings based on a program that I use called Broker Bay, which is a showing scheduling processor. Based on that information, I'm seeing showings tick up, yes, which means demand, I guess that is a demand indicator that it is ticking up. But what
Is
is
this available information to the general public? Like
it
the
is
amount?
no,
Okay.
not available to the general
Well,
public.
that's a pretty cool stat that I don't think a lot of people would have access to. So that's cool insight. You were saying?
So that's one indicator, right? And I guess that's kind of an indicator of demand. It ticked up a little bit, but one thing I am noticing since June 6th is listing count ticked up dramatically, more than the showing count did. So Yeah, sentiment-wise, I'm thinking a lot more sellers waited for that rate cut rather than buyers. I think there's going to have to be 2 or 3 more rate cuts before any material changes happen in the real estate market in terms of sentiment. Um, there's a combination of things that need to happen in the real estate market specifically. One, interest rates need to decrease to make things more affordable. Two, I think rents have to increase. We've been on a rental decline for about a year now, so to make investment more attractive, rents for sure have to increase. And three, prices have to soften. At the end of the day, right now we're seeing a lot of listings and not many and record low sales. So that's telling me that buyers are sitting there waiting for something, and that something it's probably the prices going down, softening. I don't want to say going down because going down sounds like the market's going to crash, but softening for sure.
I think on the mortgage side, like we've seen so much renewal activity from people basically trying to second guess for the first time in a long time what the bank is offering them, because all over the news, interest rates dropping, interest rates dropping. So there's been a lot of activity as far as renewals where people are looking to switch. People are back to looking to refinance, which has been basically non-existent for a very long time. And a lot of people are looking to either convert their variable into a fix because bond yields have dropped, and they're like, you know what, maybe now is the time.
Right.
And there's a little bit of skepticism on, what the path is from here. So, as I often say, what's the equilibrium point, or what's the point where we start seeing inflation start ticking back up as interest rates come down? Once you have so many layers of growth, i.e., immigration numbers, and that's kind of constant at 500,000. I mean, how much lower can we go without seeing inflation going back up? We don't know. So people are like, okay, let's lock in at the euphoria of the first cut. I personally think we're going to see at least another 2 cuts before we're in a holding pattern. But it's a little bit of relief after a long period of pain. We're talking about 0.25% overnight lending rate all the way up to 5%. So 4.75% of an increase over 18 months, and then you get back a quarter. So, like you were saying, Cameron, there's no material change. I think it's hopefully just a positive shift in sentiment.
Right.
And all we can hope for is that we continue seeing that decline without breaking anything. So
yeah, we'll see.
Yeah.
Well,
thanks so much for joining us today on the Brick by Brick podcast. There's a lot of tax changes that are probably still to come, and we'll be tuning in for that. Hopefully they shut it down. But chances are they won't.
Correct. Yeah.
So if people are trying to get in touch with you, like how do they reach out to you? And maybe you can tell them the easiest way.
Yeah, you can go to our website, TaxHeroes.ca. You can follow me on Twitter, Canadian Tax Guy. Either one of those two kind of work. Or you can just email me, Mohammed@TaxHeroes.ca.
I appreciate your time here, Mohammed. Take care.
Thanks, Cam. Thanks, Scott.
See you later. Thanks, man. Cheers.